Good morning, everybody. Welcome back to the channel. Hope we're doing really good today. Cathy Wood and ARK Invest have had a bad couple months. It wasn't long ago when Cathie Wood and ARK Invest and Elon Musk, they were put on these pedestals of investing icons. But now ARK Invest and the ARK Innovation ETF is down. It's down 28% from its high, and it was down 36% from its high. But to be fair, ARK Invest is still up 77% from a year ago. But Cathy Wood believes that this rotation from growth stocks to value stocks is almost over, and it will end soon. So that's what we're going to talk about in this video. Talk about why she thinks that this rotation occurred and why it's going to end and how long it's going to last. First though, if you're new to the channel, I'm Justin. I like to talk about dividends, income from options, and everything else financially related. So if you care about dividends or care about options or care about anything financially related, I really appreciate it if you subscribe to my channel. And if you can't subscribe to my channel, you can give me a thumbs up because that's like the next best thing. Cathy Wood and ARK, the ARKK, the ETF, they've fallen a little bit out of favor recently. You don't see as many YouTube videos about them. And even on the Google Trends, Google searches for ARK Invest are down a lot. And the high kind of corresponds with the high in the stock price. Well, what do you know there? And in April, ARK Invest had outflows of $21 billion. Now, ETF, when it has outflows like that, all it means is that there's more sellers than buyers. And when there's outflows, ETF will have to sell the underlying shares to make sure that the investors get their money. Now, there was also an article floating around a few weeks ago about a fundamental flaw in the way that, a possible flaw in the way that this ETF is structured and the way Cathy Wood invests. Because she likes to take large positions in these small up-and-coming companies that tend to be a little illiquid. And she'll take big positions because she believes in that exponential growth in the future. But in the event that there's a correction and there's outflows, she would need to sell these small companies, these small illiquid companies, and she would be the biggest seller and there wouldn't be any buyers, and that would create more downward pressure on these stocks' share price. So there's a big, I was going around that's a possible big flaw and weakness in Cathy Wood's strategy. But Cathy Wood released an article just recently going over the reasons why there was a rotation from growth stocks to value stocks, and she believes it's going to end soon. And she lays out the current situation and why money will start flowing back into growth stocks in the next 6 months. For one, she thinks that this correction was very healthy and it was good, and it reduces the risk of a bubble kind of like situation in growth stocks and these innovative type companies. In our view, this rotation has broadened and strengthened the bull market significantly, preventing another tech and telecom bubble and setting the stage for another leg up in innovation-based strategies. Had the equity market continued to narrow toward innovation, the odds of a bust like that after the tech and telecom bubble would have increased. Instead, valuations have reset. So that's pretty good news if you're investing in something like Tesla or Palantir or these kind of companies and you want to hold them for the next 10 years. She goes on to mention the valuation of the companies that they currently invest in, and she has these revenue models, and revenue has not decreased with this correction, but the share price has fallen a bunch. So in her eyes, it's a sale, and these stocks, they've gone on sale. For the most part, therefore, during the past 3 months, our long-term earnings projections associated with companies enabling The 14 technologies involved in disruptive innovation have not changed. Their stocks, however, have dropped 30 or 40%. The one thing I'd like to point out with this, and that kind of caught my attention, is that long-term revenues haven't dropped in 3 or 4 months. And I just feel that 3 or 4 months is a little short to see a big decline in revenues, or that's only one quarter, that's only one earnings season. So I feel like that's a little too short to make a good assumption on long-term revenue projections. Or maybe it isn't. Like, Cathy Wood is way above my pay grade, but that's just one thing I thought. Who knows what kind of models and projections and whatever else they're doing to figure out the valuations and assessing revenue of these companies. Now, there's 2 reasons why this rotation has occurred. And the first is that the COVID correction was a V-shaped recovery. So if you think we had our big dip down and then big dip up, and the companies that benefit most from the big dip up are cyclical companies. And cyclical companies are companies that benefit from the business cycle, and they go along the business cycle. When the economy is doing good, these kind of companies will do good, and when the economy does bad, these kind of companies will do bad. Think of like automotive companies and entertainment and travel companies. And the second reason is rising inflation and interest rates, and this has caused an increase in the discount rates for discounted cash flow. So it makes these companies look more affordable when you account for inflation and interest rates. Now, Cathy Wood believes that this will end within 6 months because right now, cyclical companies, they are rushing to catch up with pent-up demand. Now that the world's kind of opening up again and the vaccine's working, there's more and more travel and entertainment. Cyclical companies are rushing to catch up to that pent-up demand. But then in time, when everything's vaccinated and the world's like back to normal, it's gonna balance out. And cyclical companies are still gonna be behind the ball a little bit. Companies in general are going to be behind the ball a little bit, but cyclicals in particular, because they're going to be trying to build up and catch up to pent-up demand, then that demand's going to level off, and the cyclicals are going to kind of overshoot, and then they're going to have excess supply because demand has leveled off. And then that will drive the rotation back into growth stocks. She also mentions the 2 sectors that she thinks will be disrupted the most in the coming 5 years. Interestingly, the biggest beneficiaries of the rotation towards cyclicals during the past 6 months have been the 2 sectors that we believe will be disrupted the most by innovation during the next 5 years: energy and financial services. And reasons like electric vehicles and self-driving technology, cryptocurrencies, decentralized finance, these are going to be the drivers behind the big disruption in energy and finance. Now, Cathy Wood has been on the little media tour and given interviews and saying that these kind of companies, they're on sale right now. And we know that ARK has bought a whole bunch of new shares of Palantir in the first quarter, and they have 18.6 million shares of Palantir, and they also sold 320,000 shares of Apple. But she also went on Bloomberg and said that they're buying Tesla, Draftkings, and Coinbase. And ARK has bought just recently another 1.2 million shares of Coinbase, giving them a total of 4.2 million shares. And if Cathy Wood believes that Bitcoin will reach $500,000, Coinbase is just the kind of company that's going to benefit the most from the mainstream adoption of cryptocurrencies. Cathy Wood is definitely standing by her convictions and putting money where the mouth is, and she has a track record to back it up. But, they also say that making predictions is hard, especially about the future. So, what do you think? What do you guys think? Do you think Cathy Wood is going to catch fire again and going to win the hearts and minds of investors? Another question. Are you invested in ARK, the ARK Innovation ETF, or any of the other ARK ETFs? And how did you feel during this correction? Because there's kind of an ugly correction when a lot of stocks are going up. Are you in this for the long haul, and did this not affect you very much? Because I think a lot of investors, especially if you look at that Google Trends, if you think that's when a lot of people are buying, a lot of people are gonna have lost money by investing in ARK, the Innovation ETF, or any of the other, brother and sister ETFs. But I think that's all I got for this video. If you're still here, I'd really appreciate a thumbs up. Subscribe to the channel if you haven't. And then I want you to go have a good day, all right? Justin out.